Good evening, all. Ira Epstein of Linn Associates with your SPDR ETF wrap-up, and this is for Sunday. And we're about 7 p.m. Central Time on November 28th, 2021. I'm intentionally late with this. I normally put these out on Saturday, but I wanted to see the Sunday news. I wanted to see what all the different scientific heads had to say about the, I guess it's called Omicron, what they're saying about this new variant of COVID-19, and I'll give you the synopsis. They don't know. It looks different. They don't know if the current vaccines and the booster shots will have the same rate of protection that it did before. They don't think it won't have protection. The question is, how much of the protection will it have? Will we have to get another shot? They can't answer. We know it's highly contagious and it's spread everywhere. When I use the word everywhere, believe me, there's few places it's not already at. I'm certain it's on the North American continent. Dr. Fauci said he would not be surprised if it's in America. I would expect to wake up on Monday morning and we have our first case somewhere. Okay, so that's what you're dealing with. Did the sky fall in? Yes, to a degree, but it did it on a day that the market is not prepared for it. The day after Thanksgiving is traditionally a very low volume day. It's a day of not too much. You don't get government reports. You don't have much coming out one way or the other. So the market just sits back and takes a look and says, okay, let's get through the hours where the people can adjust their positions. They weren't ready for this news. And when it came, you saw severe breaks in the energy markets. I'm a futures trader. 13% drop in one day is a heck of a drop. I don't recall seeing that. Not recently, and I'd have to go back on my charts. When's the last time I saw it? 2-3% drops in stock indices. I can go on and on. The metals got smashed. And the question is, what does that all mean? That's what we're here to talk about tonight. So look for changes. Look for stricter travel rules. This idea that to get on an airplane, and the European Union has, well, I've had my vaccine shot and I should be able to fly without getting tested. It's probably going to go the way of other things. I wouldn't be surprised if we all have to get some type of test before we get on an airplane to be certain we don't have it. I don't care if you were vaccinated, had a vaccination 6 months ago. I think they're going to make that. I know to come back to the United States from Mexico just a couple of weeks ago for me, I had to go through it. I didn't like doing it. You have to do it, and it's smart. And if you have it, you can't come back to the States. You got to go into quarantine where you're at. That's going to be the rules of the land that I think are going to come. This is just going to keep tightening things. The idea it's all loosening up and we're at the other end of it. We're seeing how fast the mutations can happen. And that'll change everything, and obviously it's going to change supply chain thoughts. It's going to change the Fed. Let me say this. You're going into a meeting, you're OPEC, and you watch fuel oil prices tumble off of this on Friday. You're watching the United States and the allies coming out and saying, let's release surplus oil that we have. It's not that much when you really look at it, but it's symbolic. And now they want us, I'm pretending I'm the OPEC member, coming in there and going to say, well, I'm going to give you 400,000 barrels of oil in December more a day. No, I'm not, if I'm OPEC. Maybe I have to take a look and see how bad this variant is. Let's not throw more oil on into something we don't know. You just had a big break. That's what I'm expecting they'll do. They've already delayed the meeting and when they're going to tell you what they're going to do, pushed it back. It is next week, but it's been pushed back. But next LK, you can see how the market had an outside day to the downside. It has had higher high weeks every week for the past what? If you take a look at it, 1, 2, 3, 4, 5, 6, 7 of them. Pretty important. Where's the 18-week moving average? That's what I call the line in the sand. It's at 158.68. Is there a trend? Not really. You have a lower low, higher high. Where would the resistance be? Probably the upper Bollinger Band. And you had spent the past 4 weeks or so over it, and then you let loose on Friday, which you should do. You only trade outside of the band 5% of the time, and I look at each one of the successive weeks that you have done that. Example, you closed this week at 161.53. It was over the upper Bollinger Band, so that's week 1, 2, 3, and 4. You had 4 weeks in a row. I give that then a 1% chance of being over that Bollinger Band by the end of this week that you were in, just ended. Why? I subtract 1 percentage point from the 5% of the time when it's consecutive and over it. It's a rule of thumb. It also tells me it's strength in the market, not weakness. But it tells you, at least it tells me, and that's what I teach in my charting course, which I'll talk about at the end of this because you can get my charting course now for free. If you're, stay over it, okay, that you're going to pull back. The odds are you're going to pull back in the market. The question is, where do you want to come in? Momentum is still up. So if since it's a weekly chart, by the end of the week you have a reading of 79 or under in the slow stochastic and the red line, then the odds favor you're going to make a run to wherever the 18-week average is. Do we understand that? That's what I'll be looking at this week. In PAVE, the market's been fighting at the upper Bollinger Band. I have been adamant in telling my subscribers, no, you don't want to be in this market now. This was the play that they would pass the infrastructure bill. Now the market has to digest it, and that money's not coming out 1, 2, 3. They're setting up committees, who gets how much in the states, blah, blah, blah. Slow stochastics, when it reopens, probably going to lose that 79 reading on Monday, but this is a weekly chart. So if by the end of the week it's still over 80, the pros, they'll look at it and maybe want to come in. Right here, I don't think they want to. The trend is now down. You have a pattern of lower highs, lower lows, and I think they got scared, but it's still embedded, and until it loses it, they may not come out. Probably didn't. In the industrial sector, well, we have a pattern here that's questionable. This low, I'll point to it, was lower than that one. So I'm going to say you got a lower low, higher high, and you're back to neutral. You had gotten overbought, and that's about where you're at. You're correcting that. You had been overbought back here, too. Now, follow me. Did both numbers get over 80? Day 1, or week 1, week 2, week 3? They did. Now, if the market loses that, and this was the 12th of November, you want to be out. You get a 77 reading, any reading under 79, say goodbye. The odds favor now that you're still going to get back down to 52.35. That hasn't changed. We'll see if the odds play itself out. Is this a bearish play? Not really. Why? Because even though the swing line is down, the bias is up. When you're over the 18-week average, the bias is up. It is a filter on the swing line. Down, up, you have nothing. Correcting an overbought condition. When you lose an embedded reading and you don't get it back immediately the week after, you go to an overbought condition that then has to get neutral by getting both numbers in the slow stochastic back under 70. In the SPY, I didn't have the title up there, big outside week to the downside. You can see your momentum. Did we embed here? Take a look. That week, yeah. You were embedded. And now you have to watch in the morning. I'm telling you, the S&Ps are up 30 points tonight, so it'll be interesting to see how everything plays. But that's today at 7 o'clock. We don't know where they'll be. If you lose the embedded reading, I'd look for the 18-week average of closes. Anyone that's still in it's got their fingers crossed that by Friday it won't do that. It's a long time to wait and a lot of risk. In the emerging markets, you have a pattern that's bearish. Lower highs, lower lows, and you've hit your downside target. Why bearish? Because these will be the market's worst hit. We don't know what we're going to do in the well-developed countries with, what is it, Omicron? What's going to happen to them? Don't know. What about their vaccines? How have they gotten it out? I read in Africa that they have plenty of vaccine. They just can't get the population to take it or get it to them. That's sad to hear. In gold, this is the number that I put into my special report. I don't mind saying that. This is where when I had GLD there, and it's off our website now, so you can't see it. This is where I thought on the weekly chart the market had to get down to make a stand. Haven't been proven wrong. I'm wrong on a move under 164.37, and at 173.70, I look very, very right. GDX, same thing. To me, this is the buy number zone that I had talked about. Doesn't mean I'm right. And I'm looking now for the resistance back up here to the 100-day to the upper Bollinger Band. I'm wrong in gold if you get under 30.96 on that special report. ARC, This sideways action, is it going to be a top to break the market even lower? I teach that you do not go short under Bollinger Bands. You take money off against them, but the pattern is lower, high, lower, low, and still pointing down. Nothing friendly there. Amazon backed off against the upper Bollinger Band. We're going to see how all their numbers look. I saw, was it Dick Clark, I think's the gentleman's name that was on TV today, talking about how the sales are going, how the numbers look, and they apparently look still very, very good. Everything's looking fine there. They talked about how they're treating also their employees, and they do not have a mandate that you have to get vaccinated, but they have a mandate on testing. And they have mandates all over the place that they have to cover. They're large, they're flexible, I get it. Higher lows, higher highs. We'll see what goes on through there, but this is the area that I think the pros took their money off the table the past 2 weeks. Apple, market was over the upper Bollinger Band, looked for a pullback in it. I wouldn't be surprised to see major support around that 149 level show up. TLT, well, you know there's a panic on, so people are buying the Treasuries. You have a pattern here of lower highs, higher lows, and you're overbought. I don't see a thing in that. And last, Tesla. Elon Musk is still selling stock. So as nice as the markets come back, where do you think it failed against? I'm laughing. You know, when it got under the Bollinger Band, which it should have, I remember what I teach you, it only stays under it so many times and over it, and then it pulls back into it. To get back up to it and fail it against it, that's about the zone that you'd look for. There's nothing on this chart I like yet. You've lost the embedded reading. You could pull back for another test of these lows without any problem. I'm assuming he'll keep selling the stock as he said he would until he gets to that divestiture that he was talking about. Now, let's talk about our Cyber Week special. If you buy any of my research, a 1-year subscription to it, which we've discounted as well, you get the $249.95 charting course, or you can take the enhanced Bollinger course for free. That's a $75 value. Either of the two, just pick it. It's that simple. How do you get there? You just go to our website at www.iraepstein.com. Go under the word research, pick it, and you can tell us when you want to start the charting course. So if you wanted to give it away as a gift, you can do it. Our plans start at $13 a month, which is $156 a year if you break it down that way. But that is what we get. We get it up front, and you decide then what course you want. You take it from there. To view it, you can click the link here that you'll see up on the top of the screen. It'll take you right to the page that you need. Purchase anything you need. We will absolutely make sure that you get your course and everything, and it starts when you want. I'm Ira Epstein. Have a great day.